If you're not cutting costs and making money, you are out, baby.
The FX Morning Mayhem podcast is an essential listen for currency traders. Each episode covers a curated watch list of key currency pairs alongside insightful market observations. It highlights crucial daily news events that could influence the market, ensuring traders are well informed. Additionally, the podcast offers valuable trading strategy tips catering to both new and experienced traders in the Forex market. This podcast is for educational purposes only. None of this info should be construed as investment advice. To see the trades called out live for free on our Slack channel, click the link in the description or scan the QR code to join the trade faction. If you find this podcast valuable, please follow and share with a friend. And now, on with the show. Good morning, everyone. It's Tuesday, February 4th, 2025. And you're listening to FX Morning Mayhem, your go-to podcast for the latest updates in finance and global markets. It's time for the daily market briefing. Let's dive right in. In today's headlines, breaking news on the trade front. The US has just dropped a fresh 10% tariff bomb on Chinese exports. And Beijing is not backing down. China's striking back with its own financial counterpunch. 15% tariffs on US coal and LNG, 10% on oil and agricultural machinery. In the markets, it's a cautious morning. European stocks are tiptoeing, with tech showing some muscle. US futures? Slightly in the red, but nothing panic-worthy. Currency watchers. The dollar's holding steady, but keep an eye on the Japanese yen. It's looking a bit wobbly today. Coming up, we've got the JOLTS job openings report dropping soon, and a parade of earnings that'll make your spreadsheet sing. Google, AMD, Snapchat, PepsiCo, Pfizer, they're all on deck. Stay tuned for a currency market update with Bill and Dave up next. Thanks for listening to FX Morning Mayhem podcast. Don't forget to subscribe and leave us a review if you found this helpful.
All right, let's get started. Go without Dave today. He's feeling a little under the weather. See if we can go through this fairly quickly. We're looking at the Aussie New Zealand dollar. We're in an uptrend. We're in a long wave phase, so we're looking for longs. There was actually one nice long that I posted here, but we'll keep an eye out for another sweet spot to form there if necessary. The next one is Aussie US dollar. We are in a short wave phase, in a downtrend in the zone. I'm in this pretty heavily. We've already made a decent run down this way, about 35 pips, so I'm about at break even on this trade. I'm waiting for to carve out a little bit more out of this and maybe end it up in a profit. So we'll see what happens on this particular instrument. Here's the Euro CAD pair. We are in a downtrend. We're in a short wave phase. We are in the inception zone. So all we're waiting for is a sweet spot to form somewhere in this area on this one, and we'll take that trade short. Pound Canadian dollar trend, a long wave phase, looking for longs. We are in the zone. There was one little opportunity here. We got a little pop out of that. Could have made some money on that. We're waiting for another one to materialize. New Zealand dollar, US dollar. We are in a downtrend, short wave phase, so we're looking for shorts. We are in the zone. There have been a couple little pops down here and here. We're waiting for another one to form here, and we'll see what happens with that. Singapore dollar, Swiss franc, uptrend, but we are not in the zone, so we're going to ignore that one. US dollar, Canadian dollar, very slight downtrend, not in the zone. We are going to ignore that. US dollar, Swiss franc, uptrend, long wave phase, not in the zone. We will ignore that. So that's it for the currency pairs. What I was going to talk about today was an interesting article that I saw over in Jobs for 2024. And the reason that it was interesting was because the highest turnover was for CEOs with a 16% increase from 2023. Like 2,221 CEOs quit in 24. So where did they work? A whole bunch of them, about 493, worked in government nonprofit work. We lost 200 CEOs out of the healthcare and technology sectors and 100 CEOs out of entertainment, leisure, financial services, and industries like that. What were the reasons that they were leaving? Some of them were economic. Obviously, some of them were political. There's been a rapid advancement in technology, especially AI and automation. So some folk are getting left behind because of their inability to adapt to that. Boards are focusing intensely on efficiency and productivity. So if you're not cutting costs and making money, you are out, baby. Notable trends, 143 founders left CEO roles in 2024 compared to just 29. So if you created the company, a whole bunch more of those kind of people left their companies this year than they did in the past. Interim leadership appointments nearly doubled, meaning acting CEO, co-CEO, all that kind of good stuff. Some of the bigger ones that have hit the pavement are the CEO of Boeing, Dave Calhoun, and Pat Geisler of Intel, and John Donahue of Nike. The Western region led the CEO transition with 668 of them, and California has had the most departures, 223, followed by Texas with eight. Interestingly, despite the high number of exits, most of executives remain very optimistic about the U.S. economy. Let's see what happens and keep your powder dry. Good luck trading. This is Bill, over and out.